Hello guys, welcome back. And yesterday we did have a surprise. As I've mentioned on the webinar, if you've not been following me, I do have webinars 3 times a week, Tuesday, Wednesday and Thursday from 5 to 6 p.m. And you're lucky because today we're going to have one from 5 to 6 p.m. So join me right now on the Telegram group. That's where I send the link out when it hits 5 p.m. in Australia time. But I told everyone yesterday that the things are getting a bit crazy. In what sense? Because we did have a big surprise from CPI, from inflation data yesterday from USA. Let's have a look at those numbers and what is going on, because the Fed is now predicted to cut less than what it was predicted to cut 2 weeks ago or 3 weeks ago. And wasn't that supposed to be opposite? Because inflation came lower, isn't the Fed should be predicted to cut more than what it is predicted to cut only twice now and less than 3 times this year? So that's exactly what I want to talk with everyone today. But before we go any further, I need your support. I need you to comment on this video. I need you to like this video, thumbs up, and subscribe to the channel, and send this content with your friends, because that helps us to grow and help your friends as well to know what's going on the market. So yesterday at 11:30 p.m. Australia time, we had the CPI and the core CPI, year over year and month over month. The CPI month over month came in 0.2% from the consensus of 0.3%. The core CPI month over month came in to be 0.2% from the expected 0.3% as well. The CPI year over year came in to be 2.8 from consensus of 2.9, and the core CPI 3.1 from the consensus of 3.2 year over year as well. So all of the measures, all of the CPI measures month over month, core month over month, CPI, everything came in to be lower than what was expected. And wasn't everyone fearing about a recession? Wasn't everyone fearing about the stock market crashing? Wasn't everyone actually, oh my God, what's going on? And then that happens. So that's a big surprise for the market. But we didn't have much of a move on the US dollar, because the US dollar went all the way down, as we know at the moment, and it just had a little uptick to 0.4%. So not much at all, okay? And then now fold a little bit. Yields rose on the first hour until midnight, 1 a.m., until midnight 30, 1 a.m. They raised about like 0.2, so not much, but they did have some expression on that tilt. So that's interesting. So what's going on? Basically, we have Trump with his protectionism sort of policies, tariffs, taxes, and sort of investment on companies, etc., trying to make US great again, as he says, as he proclaims it to be, right? So we had all of these pretty much 2 months of Trump, 2 months and a half of stocks falling, yields falling, and then we have now inflation falling. Isn't that good for him? Well, that's good, because population will think that congratulations to Trump, because when Biden was in power last year, we couldn't get below the 0.3 and we couldn't get below 3% of inflation, and now here we are. I wouldn't say it's because of Trump. I would say it's more about the central bank job and what they have been doing all the way. But what's the point of now the Fed pricing only 2 cuts and not 3 cuts? Because I always say, if inflation is coming down, the Fed will continue to cut. Well, that's not exactly what is happening. If we look at the CME Fed Watch tool, there was expected to be 3 cuts this year, 3 cuts of 25 basis points. So 0.75 basis points in total. And now it's expected to be only 0.5% in total. So that is due because of all of these rumors of recession, all of these rumors of people fearing that the stock market will crash again, and it's so interesting because the fear, the VIX, the indice of the volatility index, the fear index, it's on the 15, all right, and when it comes to 20, that's a big take, and we're very close to that. So if we continue to go this, the central bank will have to hold interest rates for longer, of course, to control that as well. It's not only about the inflation, remember that. It's not because the inflation came lower that the central bank will cut the interest rates. If that was the case, look at back in 2024. how many releases we got of inflation coming lower. We went all the way down, all the way up from 5 to 6% now to 3%, and we didn't have too many cuts. We did have 2-3 cuts, and now is expected to be only 2 cuts this year for that reason, okay? So I hope I made your head a little bit clear on what's going on around the inflation. Yes, inflation came down, but there's a lot to be done yet for the Fed to continue to cut this year. Maybe 2 cuts, and I've mentioned it many times. The Fed won't cut 3 times, only 2 times from now on, because they did already cut, so 3 times in total, not 4 times, okay? And that's what Ralph Bostic have been saying as well, the former one of the chairmen on the Fed, and he said, look, we are expecting 75 basis points, so he's not wrong. He's definitely not wrong. So that's another importance of you listening to those types of comments from central bank members, okay? So tonight, if you want to know more about that and how to be trading those opportunities, because there's plenty of opportunities, the market has been moving all the way. So if you want to know more, then come to the webinar, 5 to 6 p.m. live. Won't be charging you anything. The only thing we ask is thumbs up and subscribe to the channel, and join me on the Telegram, because that's where you will be able to get the link to access the webinar tonight. Besides that, guys, I hope everyone have a beautiful day. Hope everyone is good, doing some good trades as well this week, because there's a lot of opportunities on the market. I see you in the next video, or I see you tonight. See you.